Hello, Tara here from Money Management International, a full-service nonprofit credit counseling organization dedicated to improving lives through financial education. Here at MMI, we know the importance of credit. It can affect you in many ways, from approval odds to interest rates and more. Credit matters. But did you know credit is also an important factor as an aspiring small business owner? According to the Small Business Administration, 20% of small business loans are denied due to business credit. So let's take a closer look at this important tool and how you can use it to help your small business succeed. Many small business owners start out using personal credit to finance their businesses. And if your business is not a separate legal entity, as is the case with a sole proprietorship, you'll continue to use personal credit for your business. So establishing and managing personal credit is often the first step in obtaining business credit. Like personal credit, business credit helps determine risk. It's a record of a business's financial responsibility, and financial organizations and investors often use it when deciding whether or not to lend money to your business. So how can you establish business credit? There are 5 key steps. Business credit can be established and reported for legal business entities. So first, you must form a legal business structure like a partnership, LLC, or corporation. This means you wouldn't be able to establish business credit for a sole proprietorship where there is no legal separation between you and the business. Next, apply for a federal tax ID number or employer identification number or EIN with the IRS if you don't already have one. You'll need this when you apply for business credit. Third, open a business bank account, creating a clear separation between your personal and business expenses. This account will serve as a key reference on credit applications, as you'll need to provide data when you apply with lenders. The next step is to build a credit profile. To do this, you could establish credit with vendors or suppliers that report to business reporting agencies. A Net 30 account, for example, is a credit account extended by vendors. You'll get an invoice for your business supplies, and you can pay it within 30 days to help build credit. Once several trade lines have been reported, a business credit rating will be generated. You could also build credit by applying for a credit line, loan, or credit card from your financial institution in the name of the business. And finally, monitor your business credit report and rating or score. Business scores typically range from 0 to 100, and there are 3 major business credit reporting agencies: Dun & Bradstreet, Equifax Small Business, and Experian Business. So be sure to check each file. Keep in mind, anyone can check your business rating, generally for a fee, so you may have to pay to see your business credit score or anyone else's. Let's take a closer look at various business reports and ratings. Dun & Bradstreet measures risk using a Paydex score, ranging from 0 to 100. This is based on payment data along with a credit score and financial stress score to help lenders determine how much credit they should extend. To have a Paydex number, you have to file for a DUNS number through the Dun & Bradstreet website. This is free, but the Bureau must have record of your payments with at least 4 vendors. Essentially, the Paydex score reflects whether you typically pay on time or ahead of schedule, and the higher your score, the better. Equifax reports offer 3 different assessments. The payment index is measured on a scale of 100 and reflects the number of payments made on time. The credit risk score assesses the likelihood of delinquency and ranges from 101 to 992, taking into account company size, available credit limit on revolving accounts, length of time since the oldest account was opened, and evidence of non-financial transactions like vendor invoices being delinquent or charged off. And the business failure score assesses the likelihood of your business closing. This score ranges from 1,000 to 1,880 and evaluates length of time since the oldest account was opened, average balance to credit limit utilization, worst payment status on all trades, and evidence of non-financial transactions being delinquent or charged off. Finally, Experian's credit score report includes a business credit score and other information like payment trends, account histories, and public records. This score ranges from 1 to 100, and it's different from the other companies' report ratings because it considers multiple factors beyond payment history. You can estimate your Experian rating by answering questions about your company. Factors considered are number of years in business, lines of credit you've applied for, lines of credit you've opened, collection accounts, payment history, lines of credit in use, percentage of available credit used, number of late payments, and number of non-net 30 lines of credit. Across formats, your business rating says a lot, and it's an important tool for successful business ownership, so it pays to establish and maintain a strong rating. Be sure to check your business credit reports and ratings, pay bills on time or early, maintain a credit utilization ratio of 30% or less, and of course, establish and maintain good relationships with credit card companies, lenders, and vendors. To learn more about small business credit, visit the Internal Revenue Service at irs.gov and the Small Business Administration at sba.gov. Connect with business credit reporting agencies at dnb.com, equifax.com/business, and experian.com/small-business. And for more on business entities and which one might be right for you, check out MMI's Business Entities video. Thank you for joining me. Establishing positive credit can be key to the success of your business. You've taken an important step in building your plan. For additional financial wellness topics or to connect with us here at MMI, call 866-889-9347 or visit moneymanagement.org today.